Okay, so now we have a video 3 of 3. This is March 10th. Happy March 10th. Oh, wait, I think we changed the clock today. Holy crap. Am I late? No, I do have a webinar after this. So rallies into 300 are going to be met with sellers. And if you lose 260, you're going to have a giant disaster. Now, can someone please explain to me, what the hell is this? How can you make revenues of 2 billion in sales and net income of 1.75 billion? Can somebody please, did they win a lawsuit or something? What the heck? Where did this free money come from? Explain that to me. If you can't explain it, I wouldn't invest in it. Palo Alto Networks apparently is a decent company. It fell on earnings. And I said R, and that was R. I'm going to say R again. Anything in between inside this box is resistance. Respect it. So rallies into resistance may fail. Be open to this test. And here's the problem. If you lose this test, it is support. Yikes. The downside is like 212 or something. Not my forecast, but you need to know it's there. So if I'm an investor in Palo Alto Networks, I'm not adding down here. Okay? If I want to add, I would sell puts to leave room for error. Now, rallies are going to be met with sellers. If you clear 313, you might be in the green from that perspective. There is a gap above, but not every gap gets filled. Pepsi. Staples, how are the staples doing? Let me check. Okay, so why are the staples doing that and Pepsi not? That's concerning. I think 164 to 166 is a killer zone for Pepsi. I don't get long into it, and that would be an exit. 164 through 166. This is incredible resistance. And in fact, they might be tracking to go here. So I think it's easier to come to here than it is to get out of this. 168, huge resistance. They need a headline to bust through these, in my opinion. Easier to come to 159 in the next couple of months than to get out of these R's. Let that help you trade it. Pfizer. Whoo! I mean, do your homework. This is what a descent into hell. And the problem is you're losing recent support. And the bigger problem is that the next level of support is so old that it doesn't really matter much. However, you can go on the fact that eons ago in 2020, this was the bottom. Eons before that, 2016, that was a bottom. And then through 2013, that was a bottom. So you can go along on that. Or you can say this company is going to the teens. Yes. If they bounce to 32 and then they make a lower low, they're going into the mid to low teens from an investment perspective. This is a trade, in my opinion. You get long and you stop out after losing X dollars. And if you catch the bounce, you're going to make a lot of money. So it's worth a long, but more so from a trading perspective than an investment perspective. Okay, Palantir. I like the company not at these levels from an investment perspective. As a trader, you have support through to 24 and you have a catalyst at 27.50. Those are them. So they tell me that it has a headline pending of joining the S&P, and that could be a catalyst, but that might have already played out in that huge rally they had. So this is a weekly. Let's go to a daily. I have had upside targets that are around here. Let me zoom out. Yep, they exceeded my expectations. I had multiple upside targets. This is an exit point for me, even though I like the company. Look left. For years, this has been an exit point. Why is this one different? At least wait until they come back to test 22, 21. I personally wouldn't touch it until it becomes a teenager again, and it will. When, I don't know. And if it doesn't, so be it. I made enough money on the way up several times. It's okay. I don't need to get every rally in every company. PRGO, they're selling rallies. This one may not be the different. So every rally they sold, they made a lower low. So if you think about it, rally sold, lower low, rally sold, lower low. Let's take this one to this one. Okay, rally sold, lower low, rally sold, lower low, barely. So I'll give him this. Maybe this. This is potential. Be careful. Earnings, no. PayPal. This is my potential forecast based on prior action, right? So we put it there. Let's see if it plays out. Let me zoom in a little bit and see if we can get more ideas. Levels of resistance are through 62. If you take out 61, if you get to 62, you have the opportunity to clear some resistance, that letter R. But you get to 65, which is another area of resistance. So you do have support, but it looks like the resistance lines are more. There are multiple resistance lines or areas and only one level of support. It better hold. So this is so true. It better hold. Otherwise, you're going to get into the low 50s. I do like the business. Maybe, maybe not. We'll see. I used to do business with PayPal. I still do, but I'm winding it down as a merchant. So, all right. So who is this? The Qs. We will deal with that later. We already discussed it in the beginning. Redfin. Selling rallies. You should do that. I can also tell you shouldn't be short. And if you're long, you're not crazy. You could get to 8. Target 1 has been met of that M, green M. You could get to 8. However, getting to 8 and getting out of 8 are two different things. You see the problem I have? Look, this is a very pivotal area above me. So there is a lot of resistance in here, even though you can get to it. It's resistance. They are selling rallies. You have to respect that. And support-wise, they kind of poked below this guy right there. I don't know. Look at this P&L. What the fudge is going on? See, at least the stock price matches the descent in sales. This is a real estate company, I believe. So maybe rate cuts will help it. Right? Real estate? Yeah, online real estate walkthroughs. Yeah, so be careful. Do your homework. RGTI, Rigetti Computing. What the? Yeah, I have no comment. First of all, it's a tiny company with huge expenses. Their losses are 3 times their sales. That the stock does that. Do your homework. Find out what they're doing. Quantum computing. What is this? Anyway, they're up into areas of failures. It's either a trade or an investment. If it's an investment, you don't need my words. If it's a trade, it's going to be hard to get through that wick on top, 235. And you do have support scattered through 155. Rig. Huge level. Wow. Did we nail it? Is that what this is? Okay, so rally sold. We put it here. Rally sold. And what if I do? Oh my gosh, trading view. Rally sold again. Be careful. That's potential. Let me tell you what's the good news. The good news is they're so close to 540. If they can take it out, they get to here and they avoid this. Then now they're changing the habit. Good support below, scattered. You have 490 support and 460 support. So not all gloom and doom, folks. Roku. I would buy this dip. I am long and it's doing okay. The credit put spread is under fire. You can see it there. But statistically, it's still okay. I wouldn't add to it. If I wanted to start longs in Roku, I can. I don't expect it to go to 84, so I wouldn't buy calls, but I could sell puts to own shares or sell put spreads now, which would be lower than my area. So if I wasn't long Roku, I would sell credit put spreads to generate income. You do have support from this price action and prior price action, and the business is okay. This is my level of risk down here in the 55 area. $9 is nothing for Roku. In 2 days, I can be in trouble. So be aware. If you're in this trade like me and it's a huge size, I would cut it. I would cut it down, or I would buy a debit put spread for a shorter period of time, a little bit shorter. Defend it is what I'm saying. Starbucks. The problem with this stock is that all these blue lines you see, those are VWAPs, they call them, and I anchor them at areas of interest, highs and lows. So some originate lower and some originate higher. You can see them coming from above and coming from below. What does that mean? There's a mess of price action resistance inside those lines. They're all resistance now, and they're all above you. So the rally back to 95 or higher is going to have to cut through all this resistance. So it's easier to just drift lower. If you lose the orange line below, the one that says support but a better hold, you will go to the low 80s, which will make a good trade from Starbucks. It is a long with stops because you do have support. So if somebody went long because they want to get back up to 92 and 93, these comments I just made don't stop you from making money because you have room to get to 95 and 96. So it is tradable on the long side, but be careful. I wouldn't add to an investment. Okay, silver. I don't think you meant that one. Oh, maybe you did. Silver Crest. I don't know what that is. I know the company, but I haven't done any trades on it. So gold is doing what it's doing. I'm assuming this is what is this? In the exploration, acquisition, development of mineral properties and precious metal. Yeah, it's not silver. Is it silver mining? Then why is it doing so terribly? The stock. Okay. And the P&L. What the hell? So this is not for me as an investment. Yeah. It's not for me as an investment. The chart says if you break out of 5.8 to get to 6.4. If all these tiny companies are from one person, you should expand your horizon of what tickers you invest in. If you take out 570, 580, you can get to 630. And you do have a lot of support below from a technical perspective. Schlumberger. The breakout happened from 49.50, and the target is about 52, 51.5. So you're pretty close to the target. You do have support below, but you have a lot of resistance. Look how choppy this chart is. Pretty gross. You do have support below and resistance above. So the easy work has been done. I don't know. Depends on whether you're trading or investing. The decisions are different. Smart sheet. Okay. It's stuck and it has support below and it has a lot of resistance above. So what do you do with it? If you're an investor, it's okay to hold. If I'm already holding, I don't add. You could have an opportunity to add at 36. And if you do, it's probably 34 or 35. It does have a lot of support. But if you lose the last couple of weeks, you will step down in support towards 38. Solid. If you lose 38, and this is a big if, you're going to step down to 34. Meanwhile, 45 or higher should be a lot of resistance. You can use this candle as a gauge, 44 to 45. Snowflake. All right, so catching the falling knife was the right thing to do. Chasing it into earnings was the wrong thing to do. So if you see here, back then my comments were, I'm taking you back in time to tell you how comments have meaning. I said if it drops, because it had a drop coming from this red W, and it rallies and it drops again, it would have a head and shoulders type of a thing where we would target somewhere down in this area of 204. Well, what happened is they reported earnings, a solid quarter, proof positive, again, that it's not about the quality of the quarter, but the expectations. I can talk about that for hours. The first bounce, I think I took a credit put spread on it, which is under fire, but is statistically still viable. Yes, I did. There it is. I think that's that blue box. So I am under fire in a credit put spread, but at least I don't need a rally. All I needed is just to stabilize. So if I look left, it has reasons to stabilize, but it can go another $5, $10. So if the market drifts lower, this one will continue to drift lower. Now, what's the upside? So if I bought shares at 232, I'm stuck for a long time. So I better start selling some covered calls if I want to hold it. If I bought it for an investment, yeah, that's what I will do. But if I bought it for a trade, I lost. I would ditch it. So the big picture on selling covered calls, if I own 100 shares, I can sell one call against them, but you can't just do it willy-nilly. You have to calculate where you would be at least broken even. For example, if I paid 232 and I can sell a call at 208, and if I get called away at 208, I break even because the call gives me $14, then $24, then I would do that. These are fictitious numbers, but you get the concept. Reach out, jump into the live room, we can discuss it. SOFI, okay, so this is where I'm going to call everyone out. You know who you are. I'm calling everyone to put the highlight on this. Okay, this is a picture perfect stock for this conversation. When it spiked up, by the way, we've been trading SOFI really well for a long time, and our entries have always been around $5 and even lower than $5, okay? And we made money with these entries. Now, I don't get any questions about it when it falls on the earnings like it just did after the earnings. Not one question. When it fell from here to here and here to here, not one question. 100 questions on these days. Can I go long SOFI? I want to go long. Here's the verbiage. It's almost always the same with SOFI. I want to go long SOFI. Is it too late? If you're asking me if it's too late, it's already too late. That's my opinion. But what I'm calling you out on is if your instinct is to go long, to come ask me about SOFI when it's doing this, then you need to flip your instinct upside down. You're doing it the wrong way. You need to do homework and find ones that are about to do what SOFI just did. Okay, so if you're not calling me on this dip, I think I sent out a note or I discussed going long, and if you did, now you're already up on the stock. There you go. Somebody's doing the right thing in the live room. So this dip was buyable into support. Now I can tell you that 820 is going to be very resistive. So if I made money, I would exit. I would treat it as an investment. It's still not very cheap. There is a potential for it to go to 620 if the market's correct. I like the company. My level is below 7 for sure. SoundHound, same thing. Couldn't field the questions fast enough when it was doing this. And now that it fell, nobody's asking about SoundHound. Very few people. 6.8 to 7 is a problem. 4.8 is your defense. Those are the numbers. Ping pong inside of those. If you lose either, you're going to go in that direction. So if you lose 4.8, you're going to get to 3.8. If you take out 6.8, you might get the test of the high. SOXL. All right, I don't deal with these things. This is an accelerated ETF, so be careful what you trade here. This is tied to NVIDIA. I bet you it looks just like NVIDIA stock. Yep. So you're trading NVIDIA indirectly. So if you want to catch a knife in NVIDIA, you get long and you hope that the support at 46 hold. Otherwise, this thing is going to 40 or 38 in the next couple of months. I think it's going to take a miracle to break through that Friday high. I hope I'm wrong because a lot of people got stuck high chasing, but that's my instinct. It says that we just saw the high in those stocks. We'll see. That was a violent reaction. If I look left, I don't see a reaction this violent for a long time. You see all of this? Yeah. Well, it takes a lot of punching power to do this. We'll see. SPY, I'll cover it because I already did. Team. Same scenario as snowflakes. Good company, good report, crappy reaction to the report. Why? Because that's what they do. Hopefully you weren't buying up here. Hopefully you didn't buy here. But if you're stuck and you invested in Team, you need to start looking into studying covered calls. Selling covered calls. You create your own dividends and that accelerates your break-even point. You can even use that to buy puts. So I went long Team on the dip. I don't know where, but I do have a trade on there. Maybe I have lines. There we go. There it is. Answered. I'm so brave. The stock collapses. I go way below and I sell something to try to make 10 to 15% out of somebody else's money. So support level is holding and they went back. That is very good that they're above 200. So let's see if they can hold that, 203. Support below has been proven and it's a solid support. I would have sold naked puts too, but I didn't want to share that. Transmedics. Okay. That is a violent stock. Wow. Somebody asked me, what is a violent stock? A stock that does this. 1 minute they hate it down to 72. The next minute they love it down to 102. Holy moly. So there you go. Those are your two big lines. If you want another line, 92.4, and another line is 69. 69, 92.4. And if you want to use this, 78. Toll Brothers. I don't understand what's going on with these builders. How are they still in business? Pretty scary. So I would avoid them. When I don't understand that much, P&L is okay. I mean, it's not crazy good or crazy bad, but what is happening here? Is this an all-time high? It is. Wow. It's just unbelievable. We are short 25 million homes. Okay, says who? Prove it. I know there are empty homes in some cities. We were short in some areas. It's not a general statement. Chairman Powell said that. Yeah, I don't trust him as far as I can throw a pebble. So, no. As far as I can throw a ton, yeah, I don't trust him at all. Whatever that's saying. Yeah. Anyway, that is a good statement there, Lou, but I still don't buy it. I don't buy it. I would have to see, you would need to study what kind of homes these guys sell to see if it's justifiable. Who's their target audience, what their areas are, and what the growth rate and shortages of that maker's area. So it's a lot to digest. For me, the trade is don't fight the trend. And if you want to bet down, it's just because they dip and then they make a higher high. So if you just shorted it because you think it's going to 118 and 117, yep, that is a good move. But if you're on the long side, buy these dips because they're making higher highs. As a trader, as an investor, for me, I don't understand it. Without spending hours of homework, I'm not going to touch it. The homework is, where do they operate? What's the shortage of home? What kind of buyers do they sell to? Are they retirees? Do they need a mortgage? What kind of areas are they in? Are they affluent areas? Are they young areas? In order to get an idea as to whether interest rates help them or hurt them or they don't care and things like that. I don't have that kind of time. There are thousands of stocks I can invest in. For a trade, it's an outstanding trading stock. Speaking of outstanding, I've done an outstanding job tracking Tesla for us. I had a couple of people that were upset because I said in some areas here, throughout this box, I said I wouldn't hold naked calls in Tesla. Okay? And then they would have a couple of days like this and goes, you kept me out of Tesla. First of all, I gave you information of what I would do. I didn't keep you out of anything. So Tesla is still in the hands of the sellers, and the statements are as such, and I've been 1,000% consistent on that for the last month. And here are the comments. If it doesn't break out of 208 because it needs to get above 212, so it can get above 220. All these things are one sentence. So it has resistance at 208, 12, and 20. And the follow-up to that, it needs to be above 220, 222 to avoid 140. You hear those comments? Yes. So if it's not above 222, I think it's going to 140 in a series of lower lows and lower highs. Those are verbatim my comments. And every rally in Tesla is reason to exit. If it loses the low from Friday or from last week, it's going to the 150s really quickly because the rally was kind of crazy and it's old. So it doesn't lend to good support. So what do I do with Tesla? If on Monday and Tuesday it goes into 190 or 187, that's a reason to exit or sell a call spread and see if it drops. It's a trade. As an investment, I would hold off of Tesla for a long time because it's questionable now. The EV prospects are questionable. This company makes great cars, wanted cars, and they are profitable at making them. Apparently, there's a giant Tesla center being built 5-minute walk from my house to service these cars, which I thought they didn't need that. So I'm a little confused. But it is on the up and up, this EV company. The stock is not on the up and up, so it's in danger. Unity, another one that's in danger. We've traded Unity pretty well. Trading wise, investment wise, it is what it is. Do your homework. It's not great. It's not beautiful. See this candle right there on the left that extends all the way through 21? That's why we put that white box right there. That's a big box of support, but it's wide. So it could be 25, it could be 22. So if you're doing something off of support like selling puts and you don't want to own shares, you could end up owning shares. Kind of like Tesla. If it doesn't get above 33, it's probably going to 23. It's easier to get to 23 than 33. Is that fair enough? And if it does get to 33, that's an exit for me. In fact, 30 would be an exit for me as a trader. Uber, I have just decided last night that I'm going to avoid doing any business with Uber. They are a racket and no customer service, and it's ridiculous. I had a conversation with one of their bots yesterday. It was so dismissive, I wanted to chuck my phone out the window. And I immediately downloaded Lyft app. I am trying not to use Uber ever again if I can help it. It is a garbage company, the way they treat their clients and their drivers. I've had conversations with their drivers. Uber keeps more than half the money, and that's just not right. So anyway, stock-wise, not an obvious entry point. The company's prospects are good because they're in the pocket of every person on the planet, basically. They can sell screwdrivers or high-end clothes, and they're going to make money on it. They're offering me car rentals, which are not cheaper than normal, and all kinds of other stuff. So they do have a lot of businesses. So don't short them because I don't like them. I'm just telling you, it's not a company I want to do business with anymore. Technically, the chart is not an obvious entry point. From a 70, maybe, cover half the gap at least, 72, you would get me interested. I think it might see 60 this year. When? I don't know. Their P&L is not growing. They're growing businesses, but where is the last few months? That's 5 quarters, so there's no seasonality issues. So are they starting to become more profitable? Maybe that's the selling point for the stock. So it's hard to tell whether they're valuating it as a mature company or not. UK, I don't know what that is. I looked at it earlier. I was curious. If you're an investor, please do your homework. From a chart perspective, there's nothing to say. You can't sneeze and you're going much lower, and you have all these sellers above. That is not a pretty chart. All right, UVV. I don't know what that is. You have a hard line in the sand at 47 you don't want to lose. If you lose that, you're probably not going to hold 44. Meanwhile, you have this giant red candle to deal with. In fact, if you want to put a box on your chart. I'm not going to put it here. 58.2 to 56. 58.2 to 56. If you ever get there, exit. If you're long and stuck. Vermilion. Okay, I know them. This is a target area, 10.6. Now the danger is what happens after that. By the way, check this out. Now I don't remember drawing these lines, but clearly they are my lines. They're hand drawn. Support lost. Tried to recover, they couldn't. And I said if they try to recover it again and they can't, and they make the lower low, they go to the target. And let's see where the target was. 2.5. Perfect fit of that target. So this red marks played out. Look, I have an X right here. You see it? So they couldn't recover this X. They got to this X. They overshot it a little bit, which was a target from back here. Amazing work. So what now? You need to hold this line. If you don't, you're going to here. And you have the opportunity. This is target 2 to do this. Now, if you do that, you have the opportunity, another shot at this X. So I'm going to put an X here. I'm going to put an X here. If you can't take out this X, you have no chance of this, of course. And you must hold this X. Otherwise, you go to this X. I'm just laying out the scenarios. Okay, that's the trading aspect. What happened here? Why so much losses? Study the company. I say study the company. I hope you guys take it seriously. VUG, Vanguard Growth ETF. Yeah, that's basically the stock market. Plug your nose if you want to get started here, not me. If it was me, find out what companies are in it. And if it's a whole bunch of hoopla, maybe you want to buy a few puts in this if they're liquid enough. I definitely would not start here. This is a nope, not an obvious point of entry. WBD, you saw me saying catch the falling knife, and it didn't work out quickly, but it's still a good entry point for a trade, and you could get to 10 and 1060, 10 and 1060. The problem is anything above this candle right there, which is 9, is going to be a struggle, and 950 it definitely is going to be a struggle. I don't look at this gap and saying, ooh, it's going for the gap. It's a huge amount of work. Look, This is zooming in on it. And look at my R's. Resistance, resistance. They lost it. This candle is difficult at 888, and this candle is difficult at 8.98, and this candle is difficult at 9.2, and this one is difficult at 9.50. So it's not going to be easy. Wendy's, they tried, speaking of Uber, apparently Wendy's tried, what do you call it? Burst pricing or surge pricing. They discussed bringing in surge pricing, and everybody lost their mind, as they should. What? A burger on surge pricing? What do you mean, surge pricing? Isn't that illegal? I thought it was illegal to squeeze the clients when the clients need it most, right? Whether there's a disaster or not. Wow, surge pricing, is that what we're calling it now? So the next time we have a flood, the insurance can surge price us out of being able to buy it? Oh my goodness. Yeah. So clearly that idea was bad. Technically, we have higher lows and an opportunity to break out from 1880. So not easy. Check why. That was support, lost. They need to take it out. So they're doing a good job. Can they do this and pop? We'll see. I would exit in this area around this white line. So if I'm stuck long from here and this brings me back to even, I would have sold out here. I would sell out here. I would definitely sell out here. Smooth out demand. Come on. Figure your stuff out. Sell the burgers. Hire more people. My goodness. XLE, that's all Exxon, because we know Chevron's going the other way. XLE, Chevron, Exxon are almost half of the ETF. So this is a target zone, 89. If I'm long this guy, I would be looking to exit. If I'm looking to chase long, I have other reasons, but it's not obvious for me to get long here. Plus, this is bad news. Is oil? CL, nobody asked about oil. Is oil in a breakout? I'll come back to, no. Well, it kind of is, but it's bearish right now. We'll go back to XLE. Zscaler, I believe this is the last one. Do not catch this falling knife. It's a great company. This stock runs so fast in both directions that, okay, technically you can bounce to 215, 220, but I cannot guarantee you it won't be 150 in 3 months. All right. So if I'm an investor and I'm long, I would not add to it here, because if it bounces, then I didn't need to add. And if it falls to 150, I would have used all my chips. There is a huge breakout zone. You see it, that green box, and they might revisit it in the 170s or lower. So rallies, I would exit. All right. I think, I mean, this stock can run fast. Rallies will be faced with a lot of resistance and could do this. And if they do that, this might be the target. It might be. So just in case, if I'm long, I don't add. If I'm going long, I treat it as a trade, not an investment. And I would sell rallies into 216 to 220. All right. And there you have it. Somebody mentioned the TLT. We'll do the TLT and then I have to get off. This here is an attempt. I would be short the TLT, but that is directly related this week to the CPI. This will move violently on CPI day. So if you have the stomach for the TLT, you can try your bet. I think shorting the TLT for a couple of months makes sense, but it is not an easy decision. Why? Because I don't think we're going to get data that says, yeah, rate cuts are happening. I think we might get strong CPI, which would erase the opportunity to cut rates, or the idea of cutting rates this year. Now, last month, CPI was super hot, but they shifted attention on the percentages. So we had a high CPI, an absolute number of 308 or whatever number was, higher than any point in time last year. So we still have a rising inflation number, but they're hiding it, convincing us that they controlled it because they controlled the rate of ascent of said inflation. And I even challenged that number too. It's fuzzy math at best. So very violent reaction in the TLT coming when the CPI comes out, which I think is Tuesday. Do your homework as to when. it's going to be massive move up or a massive move down, and I don't know which way it is. It is a binary. So if I spend 2,000 to bet down on this, on the TLT, say for using May options, I would spend a couple of $100 betting the opposite direction, shorter time. This way, if I'm completely wrong, I have enough money to make the trade harmless. All right. Okay, folks, thanks for being here. I appreciate you coming in here. Thanks for watching at home. Next time on Friday, look out. I do send out the form if you didn't get your tickers covered, and you can tell me about them ahead of time.